Hey, Money Masters and Treasure Hunters, welcome to the August 7th wonderful Wednesday edition of today's Closing Bell on the Tom O'Brien Show. You guessed it, Tom is away on vacation. I'm your guest host, Steve Rhodes, filling in for Tom this evening. Hope everyone had a terrific day out there. We had the Dow finish down 48 points at 15,471. The S&P down 6.5 at 1690. NASDAQ was off 3 at 3118. Russell 2,000 down about 8 at 1044. King dollar pulled back 34 ticks. 34 cents, I should say. We had gold up 2 at 12.84. Silver off 3 pennies at 19.49. Light sweet crude down $1.17 at 104.15. The bears are still in control of the markets. That check engine light that we talked about on Monday, folks, that is now saying that pull over into the station before you blow a piston or something, because that bullish engine is starting to get knocked around. Now, if you're not familiar with me, I'm the morning anchor at TFNN at 9 o'clock for the first 2 hours of the trading session. I use a set of trading tools, including things like the lightning bolt pattern, that A to B equals CD, Fibonacci, expansion and retracement, Gartley butterfly, swing point, volume analysis, divergence between indicators, oscillators, all of those tools in order to call the markets. I've got a newsletter service called Mastering Probability. It's out each morning at 8 a.m. It covers the currency markets, the futures markets, commodities, all the trade setups. Let me read for you the first paragraph at this morning's newsletter, sent out by about 8. Markets were pushing down pretty strong, hard and heavy. Would this have helped you in your trading? And it says this: since last Monday, the bears have maintained control of the New York Stock Exchange as the summation index has continued to move lower. Yesterday was a day of conviction, which should lead to lower price, perhaps a test of that June 24th lows, or at a minimum, a 0.618 retracement off the June 24th lows to last Friday's highs, 1617-ish in the ES Mini out there. That ES Mini 30-minute chart says shown below, as well as the euro-yen currency pair also shown below, suggests that we will see a bounce in the markets today. A likely outcome is a push lower in the markets between 9:30 and 10:30, and then a move higher. But everything is in place pattern-wise for the markets to begin that bounce now. The trend changed last Monday, and we want to trade in the direction of the trend, short, and therefore it is the first bounce that we want to sell. The only thing that could change this is the oscillator moving above zero, which needs 2,258 or more net advancing issues today. Not a likely outcome. No kidding, not a likely outcome. We didn't have any advancing issues. We had net declining issues out there. If we take a look at it, in fact, we had net declining issues of 1196. There's not a chance that the bulls can actually take charge tomorrow. We saw the beginning of that bounce today. Maybe we get a little bit more of a bounce. That is what you want to do, folks. You want to be able to sell that bounce. Look, this show is absolutely about you. And I do treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. So let's go look at one of our tools. This is the tool I call a happy person is not a person in a certain set of circumstances, but rather a person with a certain set of attitudes. Folks, the simple things in life can bring you joy if you look at them with a positive attitude. You can get out of bed each morning ready to make the day an adventure, or you can stay under the covers as long as you possibly can and rush to work with your mind and body already weary. It's our attitudes that create life circumstances. True story. A man once stopped in the train aisle before two fellow passengers who were playing chess. One of the players, a teenager, was about to give up when the man noticed that the young lad had one more move. The young lad asked the man to sit down and take his place. Taking over, the man made the one move that changed the rest of the game. In fact, he went on to victory. Now, in the game of chess, sometimes there is not one more move. That's called checkmate. But in life, there always is. Several years later, the young lad who was on the train playing chess was serving in the military, cut off from his company, alone in a foxhole. The enemy patrols were closing in on him. All seemed lost, but he thought back to that chess game and remembered that in life there is always one more move. In an authoritative voice, he ordered his adversaries. He demanded his adversaries to surrender and save themselves. And in that one move, his adversaries laid down their arms and became his prisoners. Folks, It was his attitude that created life circumstances. Always remember, there is another move out there. Let's go check out the moves in today's market. We had the S&P close out at 1690.80. Now, here is the most bullish piece of what took place today. If you're looking at Tiger TV, you can see that trend line. If you're listening on your radio or your mobile device at TFNN.mobi, thank you so much for doing that. You can go ahead and when you get home, pull up your stock chart. You want to make sure that you draw this line in on the S&P 500 because this is the line in the sand, and that's the trend line coming off of November 16th low, 1343.35. That's your first touch point. Your next touch point is going to be that December 31st low at 1398.11. Hopefully your little line tool's got an extension on it. Just go ahead and extend it up from there. What you're going to see that took place today is price came down basically and touched that trend line as was getting down into the 1684.91 level. What the S&P 500 did was it rejected not only that diagonal trend line resistance area or support area, it also rejected the swing point high from May 22nd. 1687.18 is that number. Okay, I got to grab the water. Excuse me, sorry about that. I had a piece of dust fly in there. So, you had a rejection of both horizontal and diagonal resistance. What you're watching for is whether or not the S&P is going to go ahead and bust through that area. Remember, it is the bears who absolutely have control of this market. All that took place today was a test of support on light volume. The market is just chipping away at it. And we've got some divergence here because if we switch over to the Dow itself had broken through that horizontal support. It broke through that yesterday. As a matter of fact, it broke through the swing point of May 22nd. That high was 15,542.40. And right now, today, it's closed out at 15,470.44 out there. I'll get these numbers right. Now, what you want to do is also draw that same trend line coming off of the November 16th low. That's your first touch point. December 31st is going to be your second one. You can see that the trend line for the Dow is much further down. So it's the S&P, when it comes to that trend line, that's going to give us that communique as to whether or not the Dow is going to go ahead and move down towards its trend line, right around 15,235-ish, maybe 15,000, between 15,000 and 15,235-ish. If we go take a look at the Russell 2000, let's go see what it is doing out here. Russell 2000 should be right in front of me. There we go. That was moving lower with some conviction today. In fact, the Russell 2000, percentage-wise, looks like that was the leader in the clubhouse on the way down. Yeah, 0.7%. And right behind that, well, I won't say right behind it, a couple lengths behind that was the New York Stock Exchange. So the Russell 2000, which has been Mr. and Mrs. Strength in the marketplace, is actually now acting weakest. That is another signal. If we take a look at where that could move back down to, well, I would say in the case of the Russell 2000, it's likely to move back down to the May 22nd high, which is at 1,008. That would be 44 points to the downside out there, and that looks like that is where it is headed. We did see some bullish action only from the standpoint that support held out there. I think if the gift would be if the futures are up tomorrow morning, when you get up in the morning, whether that's 4, 5, 6 o'clock, something like that, that would be the gift. And the futures, if you're wondering where that would be trading to, I would say in the futures market, because I do believe it's got a bit higher to move out here. Let me go take a look at this futures contract out here. And I would say you'd be looking at about the 1695 range. 1695 is going to be the 0.618 retracement off of the high that was put in at 11 o'clock in the morning yesterday, all the way down to the low that came in at 11 o'clock in the morning this morning, when on my show I said this market is going to bounce. Now, the first level of the bounce that I indicated was going to be at 1689. What happened? At 2:30 this afternoon, it got up to 1689.50. Okay, maybe I said 1689.50. Does it really matter? No, I don't think so. But we haven't really seen any bearish action since that move. That's the first normal move. There's more room to run to the upside, and the ideal gift would be 1695. And so if you wake up in the morning, and that's where the futures are at, sell, Mortimer, sell. We had the Dow finish down 48 points. The S&P was off 6. We're going to take a look at Goldilocks and silver. We get back from this first break, and we're also going to go out to Arlington, Massachusetts, and take a look at Procter & Gamble. But I believe first up is going to be our man, Daryl Martin. 877-927-6648. We'll be right back, folks.